Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CHOW SANG SANG interim report. CHOW SANG SANG Holdings International Limited offers a diverse range of businesses and services, including jewelry manufacturing and retailing, wholesale of precious metals, trading of laboratory-grown diamonds and gemstones, watch distribution and sales, online product sales, corporate gift, products, securities, broking, gemological research and authentication marketing, and property nominee services, property investment activities, diamond polishing and trading. The recent surge in CHOW SANG SANG's stock price can be attributed to several key factors. Firstly, the company has projected a significant increase in profit attributable to owners from continuing operations for the first half of 2025, with a forecasted range of HKD 900 million to HKD 920 million, representing an 79% to 83.3% rise compared to the same period in 2024. The expected profit surge is largely driven by higher gross profit margins on gold sales, as international gold prices have strengthened and reached a historical high in August 2025. Additionally, CHOW SANG SANG has implemented cost reduction measures and store network rationalization, which have contributed to improved operational efficiencies and profitability. Analyst optimism for sustained growth in gold and jewelry demand has also played a significant role in the stock's upward movement. As consumers adapt to high gold prices, revenue for gold and jewelry companies is expected to improve, further boosting investor confidence. Overall, these factors have combined to drive CHOW SANG SANG's stock price upwards, with a notable increase of 75.84% over an unspecified timeframe. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the success of the company's branded collections, particularly Charm, Cultural Blessings, and YUYU in mainland China. The introduction of fixed-price designs has also led to an increase in average selling prices. Additionally, the omnichannel sales strategy, which includes online sales, remote sales, and Star Concierge service, has contributed to revenue growth. On the other hand, revenue decline is primarily attributed to a decrease in demand for gold jewelry and gemset jewelry in mainland China and Hong Kong and Macau due to a drop in diamond sales. The decline in watch sales in these regions also contributed to the revenue decline. Net income and profit margins. A shift in performance. The company's net income has undergone a significant change, increasing by 71% to $902 million. However, this growth was short-lived, as the net income decreased by 10% from 2024 due to a reduction in store count. This fluctuation highlights the impact of operational adjustments on financial performance. On the other hand, profit margins have shown a more consistent improvement. The gross profit margin increased by 5.2 percentage points to 33.5%, indicating a positive trend in the company's pricing and cost management strategies. The company's financial performance indicates a positive trend in its operating cash flow. The increase in net current assets on page 18 supports this claim, while page 22 directly states that net cash flows from operating activities are $174,670, further solidifying the conclusion. Consistent with these findings, pages 40 and 41 provide specific amounts for operating cash flow, all of which point to a positive operating cash flow. The company's debt level and interest expenses have undergone significant changes. Notably, total bank borrowings and bullion loans increased substantially from $1,785 million to $4,347 million. However, the overall total debt level only rose slightly from $6,085,351 to $6,339,065. On the other hand, interest expenses are not explicitly mentioned in the provided text, but interest paid did decrease from $46,240 to $42,590. The company's financial performance reveals a mixed picture across various segments and regions. On the positive side, Taiwan witnessed a significant growth of plus 35% in revenue year-on-year, while mainland China and Hong Kong and Macau saw substantial increases in segment results, despite declines in revenue. The retail of jewelry and watches segment and wholesale of precious metals segment also consistently delivered positive results. However, some segments and regions underperformed. Mainland China experienced a -2% decline in revenue year-on-year, while Hong Kong and Macau faced a -6% decline in revenue. The securities and futures broking segment struggled with consistently negative results. Management's outlook on company strategy. The company expects a temporary surge in demand for gold jewelry, which will be capitalized upon until diamond jewelry sales recover. To adapt to changing trends, the subsidiary, the Future Rocks Company Limited, is expanding its e-commerce and offline presence for laboratory-grown diamonds and gemstones. In terms of strategy, management is focusing on repositioning stores in mainland China to meet luxury sector demands, particularly in gemset gold jewelry. Another growth area being explored is pure gold items set with diamonds and gemstones. Additionally, the company will reduce its store count by 10% by year-end as part of restructuring efforts. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has paid out dividends to its shareholders, providing a direct return on investment. Secondly, the company has also undertaken share buybacks, purchasing back shares from the market to reduce the outstanding share count and potentially boost earnings per share. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights concerns about inventory buildup, indicating a potential increase in stock levels due to the introduction of new gold items set with diamond and gemstones. This expansion may lead to additional inventory management challenges. Furthermore, the decision to close stores without strategic value could also impact inventory levels, potentially disrupting supply chains if not managed properly. That concludes the financial summary for CHOW SANG SANG. Feel free to comment below, and I will be happy to answer them when possible.